There is none. It can be tabled. Question number 2, Jami-Lee Ross.
Thank you, Mr Speaker. My question is to the Minister of Finance and asks, what reports has he received on the government's financial position, particularly progress in reaching its target of returning to fiscal surplus in 2014-15?
Honourable Bill English.
The Treasury last week published the Crown financial statements for the 11 months to 31 May 2013. They show an improvement in government tax revenue on the back of a moderately stronger economy, combined with government's responsible control over spending. And these two factors leave the operating deficit before gains and losses at $3.26 billion for the 11 months. If this improvement continues for the final month of the fiscal year, that is to the 30th of June, along with the usual historical patterns of spending, then the deficit will likely to be somewhere around $5.5 billion for the year, rather than $7.5 as forecast in Budget 2012, 12 months ago.
Supplementary question.
Supplementary question, Jami-Lee Ross.
What were the main reasons for the improvement in the government's accounts for the 11 months to May compared with previous forecasts?
Honourable Bill English.
Mr Speaker, two main reasons. Over the past few years, the government has focused on understanding and managing the main drivers of government expenditure after it had jumped by 50%, that is 50% in the 5 years to 2008. Core Crown expenses are forecast to drop to below 31% of GDP in 2014-15. That is down from 35% of GDP just 2 years ago. The second reason is higher revenue. The government is supporting this growth through its comprehensive program to build competitiveness, encourage investment and support jobs. Compared to May 2012, tax revenue is $3.5 billion higher for the 11 months to May this year, reflecting wage growth and an increase in the effective tax rate on sole traders, trusts and other individuals as a result of the government's tax reforms in 2010, which appear to be collecting more tax even at lower rates.
Supplementary question.
Supplementary question, Jami-Lee Ross.
What implications can be drawn from the government's latest financial statements in terms of its target of returning to surplus in 2014-15?
Honourable Bill English.
Mr Speaker, these accounts confirm the government is on track to return to surplus in 2014-15, but also to achieve a deficit in this last financial year around $2 billion lower than we budgeted, which is a significant tribute particularly to the public service, who have really applied themselves to managing the drivers of government spending. Bear in mind that the deficit was $18.4 billion just 2 years ago. Of course, when we get to surplus, we will have choices about repaying debt or investing in more public services for New Zealanders.
Supplementary question.
Supplementary question, Jami-Lee Ross.
What contribution is the government's Better Public Services program making to the improvement in the government's finances?
Honourable Bill English.
Mr Speaker, we believe that the effective public services and good performance in the public sector is the key to getting back to surplusing, managing the government's finances. Yesterday, ministers issued the first annual progress report on the 10 Better Public Services results, which set out to address some of New Zealand's most challenging issues. It confirms that we are making good progress in areas such as reducing crime, reducing long-term welfare dependence and improving educational achievement. In several areas, the government is making significant upfront investment to achieve better results. For example, investing more than $470 million over 2 budgets to support more New Zealanders off welfare and into work. And we're making that investment because we believe it will lead to less welfare dependency and therefore less fiscal cost in the long term.
Supplementary question, the Honourable David Parker.
Is the Minister of Finance ready to concede that he has failed in his objective to rebalance the economy towards exports and export jobs, given that there is significant house price inflation, significant debt-fuelled speculation in housing, and the IMF says we will have the worst current account deficit in the developed world this year and every year through to 2017.
Honourable Bill English.
Mr. Speaker, no, I don't concede that at all. In fact, a principal component of the rebalancing is to shrink the excessive government spending that the previous Labor government involved in, and as I pointed out, government spending will shrink from 35% of GDP to 31% in a couple of years' time. And secondly, I simply disagree with the IMF over its view about New Zealand's current account balance.
Question number 3, David Shearer.
Thank you, Mr. Speaker. To the Prime Minister, does he stand by all his statements?